Hey everybody, welcome back to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Check out my other videos. If you like what I'm doing, please give a thumbs up. Really helps out the channel, really helps to spread the word and contributes to the YouTube algorithm. So please do give that thumbs up if you like what I'm doing. Consider subscribing if you also want to watch all my videos. Let's get started. Today, we're going to talk about, has the market hit bottom? Do I think the market has hit bottom? When is the bottom? When is the market going to finally start going back up? And the short answer is nobody really knows. Nobody knows. Even the Oracle of Omaha, Mr. Warren Buffett, he doesn't even know. And he's been in the market for like what, 80 plus years. So nobody knows what the bottom is. And that's what a lot of people try to focus on is wait for the bottom and then start buying at the bottom. But history has shown that that's not a winning strategy. That's not the strategy that I do, and that's not the strategy that a lot of people do, because you're never going to be able to time the bottom, and the same thing, you're never going to be able to time the top perfectly. So you have to get it right twice, and to be perfect at timing the market, you have to time the bottom and you have to time the top when you sell. A lot of people keep on asking, do I think this is the bottom? I don't think it's the bottom, and I don't really focus on if it is the bottom. The only thing I focus on is, am I getting a better deal than I got before? So if I was buying a stock at, let's just say, $20, and my cost basis is $20, right now is that same stock less than $20? If it's less than $20, then I would consider buying it because I want to lower my cost basis as long as it's lower than my initial purchase. Until I feel that I have put enough money into that stock that I don't want to put any more. Even if it goes lower, I wouldn't put any more if I reach a certain point on a certain stock, depending on what stock it is, depending on how much free cash I have. That's all I focus on. But let's get to the meat of this video. Check out this guy, just free falling. That's what the stock market has been doing in the last few weeks. Just basically a nosedive down. I'm recording this on Sunday, March 29th. So this is the Dow Jones on Friday. The market closed at 21,000, or the Dow Jones closed at 21,636. It was down 4% for the day. The 52-week high was 29,568. 52-week low, so the lowest it's been, was 18,213. And that it represents a 38.4% drop. And that only happened in the last 3 to 4 weeks. So a 38% drop in 3 to 4 weeks, that is incredible. That has never happened before. Such a fast, dramatic drop in such a short amount of time. So this next image shows exactly how drastic that fall is. Basically in 2 to 3 weeks, the market dramatically fell. Full 3 weeks, that's when it hit its record low. But let's just take a look at these numbers. These are very interesting numbers. So look on the right side in red, the biggest daily point losses, all top 6 happened within the last 4 weeks, starting on February 27th with a 1,190 point drop. And all the rest were in March 18th, March 11th, March 9th, March 12th, March 16th. All in March, the biggest one-day point drop on record, 2,997 points. And also on the left in green, also very incredible, the top 6 largest point gains, all happening in March 2020. So March 10th, March 4th, March 2nd, March 26th, March 24th, March 13th and March 24th, all biggest biggest one-day point gains. And 2 of those point gains were last week, I believe last Tuesday and Thursday, the 24th and the 26th, 2,112 points gained on the 24th and 1,351 points gained on the 26th. The Dow has climbed up to 21,636. That's up from its low of 18,213. So right now on the 29th, Sunday, March 29th, the Dow is sitting at 26% down from its 52-week high, which is not as dramatic as it was. It was down to 38%, so it has come back up. Is it going to go up from now? Is it completely done with its drop? So let's kind of recap the last 2 weeks of what was going on in the stock market. Basically, the whole illness 19 situation caused the stocks to drop, completely crash, fastest drop ever in history. And then since this drop, the Fed has been trying to manipulate the market to ease this dropping, to boost the market, to build some confidence, but nothing has worked. Look at all these things that the Fed has done. Look, New York Federal Reserve injects 1.5 trillion. New York Fed pumps at least 50 billion. Fed pumps in at least 1 trillion. The Fed's cutting interest rate down to 0. So all these things that the Fed has done absolutely did nothing to help the stock market. The Fed cut rates, the stock market kept on falling. The Fed pumped money into the market, kept on falling. Nothing they were doing was having a positive effect on the market. Stocks just kept on falling and falling. Nothing was happening. Nothing was working. So the only thing that has worked and that has caused the stock market to kind of bounce back up a little bit is this $2 trillion stimulus package. When this was in the works, the stock market was having some positivity. As of Friday, the bill is completely passed and completely signed. Everything's good to go. Check out my other video. I'll link it in the description below about the stimulus package. Everything you need to know, who's going to get the money, what you need to do to qualify. Check out that video if you don't know anything about the stimulus package. I have all the information in that video. But basically, after this was officially passed, or in the works, and then passed, the stock market has been kind of bouncing back up. So this $2 trillion package, it includes $560 billion for individual taxpayers. So that comes out to $1,200 per individual. It includes $377 billion for small businesses, $500 billion for big corporations, $153 billion for public health, and $336 billion for state and local government. And that's the only reason why stocks have been going up in the past few days. In fact, when there was bad news coming out, the stocks still kept on going up. I believe sometime last week, the jobs report came out, and the jobs report was absolutely horrible. Record unemployment filings occurred last week. It was 3.3 million Americans filed for unemployment due to the illness 19. So that is usually terrible news. Usually that will cause the stock market to go down, but the stock market did not go down during this bad news. So what does that mean? Why would the stock market not go down with further bad news coming out? Well, the quick reason is the stock market probably has already factored in this bad news. This bad news was already on the horizon. Everybody knew the jobs report was going to be bad. It's obvious people are unemployed. So the stock market already took that into consideration. So the current prices that we see already has all these bad news factored in. So the numbers and the prices of all these stocks already has considered the jobless numbers, the unemployment numbers, and possibly has included all the positive cases that we have of illness 19 and the worst case scenario already factored in. So the only thing that's going to make the market fall even further if there's just huge dramatic news that was not expected and was not forward looking in the stock market. So I do think that the numbers are going to go higher. I do think that numbers are probably a little higher than what everybody expects. We already passed 100,000 cases as of today. So it's reported that we might even hit 200,000 cases. So definitely there's some more bad news. So I don't think we are at the peak of this illness 19 at all. So I think there is going to be more bad news, but has the market factored that in? Nobody knows for sure. I have a feeling that the stocks are going to go down a little bit. So as a matter of fact, as of this recording, the Dow futures, the stock market futures are down. It was down 4% Friday. The Dow Jones was down 4% Friday. And today, right now on Sunday, the market is down. It has the Dow futures down at negative 1.5%, the NASDAQ down at 1.4%, and the S&P down at 1.58%. If nothing changes, it looks like on Monday, the stock market is going to open in the negatives again. So to put things into more context, I like to give some numbers about what happened during the last stock market crash, the last Great Recession. The official high during the 2007-2008 recession, it was October of 2007. The high was 14,164, and the stock market did not rebound until 18 months later. It was a total decline of 54%, down 7,695 points. The lowest was about 6,464, and that took roughly 18 months. So the stocks were up and down a little bit, but overall, the market did not rebound until 18 months later. So consider what's going on now. It's only been 1 month, not even 1 month yet since the stock market has crashed. The Dow Jones has crashed down to negative 26% as of now because of the rebound last week. It was down negative 38%, now rebounded to negative 26%, and that's obviously a huge number, but consider to 2007, 2008, where it was down more than 50% and dragged on for roughly 18 months. What we're going through now is definitely a lot more dramatic, a lot faster, dropping within 3 weeks down to 38%. So there could be more to come. Nobody knows how long this is going to last. To give it in context, the last recession was 18 months in the making. Bottom may have already passed. Dow was already up more than 10% from its bottom. So if that was the bottom, if you didn't buy stuff a week and a half ago or a week ago, you already missed the bottom. The stock market is already on the way up if that was truly the bottom. So I'll leave you with this last slide. It's the fear and greed index. Currently, we are at 23, extreme fear. Just last week, it was down to 8. Cases are still going up of illness 19. So more news is to come. So maybe we have hit the bottom and we're already on our way up. Maybe we haven't hit the bottom and there's more bad news to come because the Dow futures are down as of currently. And on Friday, the Dow did close negative 4%. So that's why I encourage people to not try to time the bottom. Never going to know when the bottom is. Just focus on buying when stocks are going down. If they go down more, try to pick up some more shares to lower your cost basis. All right, guys, so that's my thoughts. Let me know if you agree. Let me know if you think this is the bottom. If it is the bottom, let me know why you think it's the bottom. If it's not, let me know why also. Give me some comments. If you like what I'm doing, please give a thumbs up. It really helps out the channel. Consider subscribing, and I'll catch you in the next one. Peace.